Hi, this is Zak Mir, editor of Spreadbet Magazine, looking at some mining minnows. They are in focus at the moment after the latest slight setback for the gold price. So I'm starting off with Avocet Mining, where the charting position remains quite similar to what it was the last time I looked here. I've got some of the previous annotations. I think the point to note here is actually the extended February RSI uptrend line. You can see that the low for the RSI was made many months ago, well before the floor in the share price, and we've basically seen higher lows for the oscillator ever since the start of the year. This is impressive. This shows bullish divergence, and you would expect the force of this oscillator momentum to eventually flip the share price higher in quite a sharp way. As far as the price action itself is concerned, we're looking at a retracement of around 50% from the best levels of August. Uh, would not expect any price action now below the floor of this June price channel, around the 14.5 pence level at the worst, and a break of the 50-day moving average at 16 pence should be enough on a weekly close basis to deliver a retest of the August resistance towards 25 pence as soon as the end of this year. So something to chase for there over the next couple of months. Moving on to Hochschild, and here we have a situation where it's not obviously not quite as optimistic at the moment. The retracement from the September rally has been rather more vicious than the equivalent move in Avocet, and we've got a situation here where you would say that the shares are still bumping along the bottom. Probably, if you're aggressive, you would be going long with a stop loss back below the 20-day moving average at £1.61. But otherwise, probably you'd want to see RSI at 50 plus versus 43 at the moment, and probably even a break of the initial, well, the final October resistance, which was £1.77. So possibly a momentum buy trigger, breaking of October resistance, and RSI back above 50 before we can be really sure that the shares are going to go up in a sustained basis. Moving on to Petropavlovsk, and here the stock has been in an extended April descending price channel, as I've written on the chart. We also have the telltale extended RSI uptrend line flagging a turnaround in the stock, but being a leading indicator on that, so one has to wait for something to confirm the turnaround. A false break, obviously, in August with the unfilled gap to the downside, a painful sell signal there. And really, after that, and with the April descending price channel, you'd be looking for at least a weekly close above the 50-day moving average, now at 83 pence, as the trigger to go long. Possible buy entry point for the longs above the 20-day moving average at 75 pence, the equivalent trade to the one we saw at Hochschild. But really, I think that after the hit that bulls have taken already trying to bottom fish here, it would be safer to go for a 50-day moving average break. After that, obviously, we'd be looking for a target towards at least 100 pence or more. But at the moment, we're still playing the waiting game. That's it for me. See you again next time.